Is this the end of the trend for crude oil? We saw the oil price hit in July its best level since late 2018, but since then it's been struggling. So I'm just wondering, is now the time to start going short crude? But crude oil is always an interesting market, of course, and since those July highs, the high for this trend, and the high since late 2018. We've seen the price under some pressure, plenty of volatility throughout August. So I thought let's take a look at it in a bit more detail and see actually is now the time to start selling short. So as usual in this video, I'll talk a bit about what's been going on with oil the last couple of weeks, the recent news, the OPEC Plus meeting earlier this week. Then we'll come back onto this and see what the trading opportunity might be. We do have a trade running in oil at the moment. We've got a Brent oil trade from the 9th of August, buying in at 67.85. The market's moved about $4 in our favour, so that's up £260. So maybe we'll look at doing something with that, but opening up a new trade on crude. So I'll talk a bit now about the recent news, then we'll come back onto this and take a look at things in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought it was time for an update in oil. As the new month gets underway, we saw plenty of volatility for crude during August. So what might the next couple of weeks bring? I do think there's a trading opportunity here, but more about that in a second. So as usual in this video, talk about some of the recent news around oil. We'll look at the big levels to keep an eye on. Then we'll jump back onto the platform and see if there's a trade to do here. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue pushing out lots of different videos on the various markets we look at. Plus, of course, every Friday at 2:30 UK time, I now do a live stream direct from my YouTube channel. If you're subscribed with the alarm bell notification pushed, you get a notification off YouTube just as we're about to go live. Right, let's get into it and take a look at crude oil in a bit more detail. So despite the volatility in August, it's been a good year for crude. At the time of recording, the oil price is up by about 40% year to date, perhaps slightly more than that. And as recently as July, we saw crude oil hit its best levels since late 2018. So continuing the recovery that's been in place since the April 2020 lows. But there are a few things affecting the price in August. We had weaker than expected economic data from China. China is, I think, the world's second largest consumer of oil. And the worry was if the Chinese economy was perhaps starting to stall, what would that mean for the global economy? And of course, oil in some ways is a bet on how strong or not global economies are going to be. So that did affect the price in August. Also unsettling traders was the spread of the Delta variant of the coronavirus. Again, perhaps with a focus on China for this and what it might mean for global economic recovery. But I think there was a feeling that perhaps the lockdowns that were taking place in China were helping to stem the spread. But that's perhaps still a nagging concern, this Delta variant for markets. The International Energy Agency has come out and said that it expects global demand for oil to increase more slowly for the rest of 2021. I mean, I think we've seen a fairly big ramp up this year. The International Energy Agency said that demand will still increase, but not at the rate we've got used to. And earlier this week, we had the OPEC Plus meeting. Some were speculating that perhaps they'd rein in some of their production increases, but they said they're going to stick with it. They think demand is still healthy, so they're going to continue with the planned increases month on month for oil production to get back to perhaps somewhere near normal before the pandemic really took hold. So what does this mean for oil? Is the volatility that we've seen over the last, probably couple of months or so now, the sign of the beginnings of the end of the trend? Is it a buying opportunity? Is any strength an opportunity to sell short? We'll take a look at all of this in a second. But first of all, let's talk about the levels to watch. So for me, I think probably the most immediate hurdle on the upside, which I think I'm going to use for a trade, is $69.40. The highs hit back in August. Perhaps that ends up being something of a problem for any rallies from here. On the downside, there was good support at the end of August around $66.80, and then even stronger support quite a bit further down in the 61.50 area. But as usual, to put some colour on these numbers, let's take a look at the chart and see what the trade could be. So I started this video off by saying, has the trend for crude ended? And here's the trend off the April lows. So this is West Texas crude. Hit, $10 in April of last year. Famously, of course, the futures contract, the May contract, went negative at the time in 2020. Then we've seen this fantastic run from that $10 low to very briefly in July up as high as $76 above that. But since then, the price has obviously struggled. We've lost this trend line over the last month or so. So I'm wondering, well, is that the sign the trend has ended? We'll come back to that in a second when it comes to placing our trade. If we take a look at the RSI, not surprising, given the size of the slide in mid-August where it went down to 61.70, that RSI went really oversold, suggesting that perhaps the price had gone far enough. Since then, we've seen a strong bounce back of more than 10%. The RSI isn't really telling us too much at the moment. We're not in overbought for the RSI. So for me, this trade is going to be all about the price action. So let's take a look at it. So what I'm wondering, have we got a new trend starting off those highs in July? Let's pick up on that. So here it is. This is the trend I've picked up on from the highs 6th of July. And at the moment, I suppose you could say that are we seeing the market starting to turn away over the last week from that trend line? We've got good short-term resistance, 12th of August at 69.40. Then we've got bigger resistance up here, end of July at 73.88. So we've got some potential hurdles in the short term. The market is having a good day today. We've seen, you can see the blue candle today. So up quite a bit so far today compared to where we've been trading over recent days. But I do wonder if the right trade to do here is a short. So what I'm going to do, I'm going to take the view that perhaps this recent bounce is going to run out of steam and we're going to see the price drift off, that it might be too much for it to push back above 70. So I am going to sell short crude. I can't remember the last time I went short crude because of course we've been in this great trend since April of last year. So I'm going to go short and I'm going to put my stop between the highs from July and the highs from mid-August. I'm going to go $72 for a stop. So if it breaks through there, then for me, this new trend, which has only been in place for a couple of months, is perhaps not a valid trend. So I'm going to go short now where the price is trading now with a stop at 72. And my target, initial target, is going to be for a drift back down to the low 60s from where we are now. I think if it can start breaking back above 70, 71, then perhaps we're just going to have a sideways range for crude for a few weeks now. But going short up here seems an interesting trade. Let's set it up. But I will need to adjust my Brent oil trade as well. So we'll do that when we put the new trade on. So I'm ready to go. The price at the moment is about 68.84 or thereabouts. I'm going to sell 110 barrels and I'm going to set my stop loss at $72. So if it breaks $3 higher from here, the trade will be closed out. As usual, my risk is around £250, the usual risk on these trades. That's it, we're ready to go. Let's send the trade through. So I've sold 110 crude oil at 68.84. That stop is in place. Let's go and adjust that existing position. So my Brent oil trade, I bought 90 at 67.85. With a stop, I've moved the stop to break even. The stop is at 68 on that, and the trade is up £265. Let me move that stop a little bit closer. I'm going to move that stop to $70. So we'll lock in a bit more profit, and if the market does turn down, we'll be taken out of the trade. That's it. The Brent trade has been updated. So my stop, what is in effect a take profit stop now, is at $70. The new trade I did is all the way down here, selling 110 at 68.84 with a stop at 72. We'll track that and see how it works out. But I think it'll be interesting to see what happens up here. This is the biggest correction or sell-off that we've seen in crude really for most of this way up. And it has lasted now. We're almost a couple of months into this. It will be interesting to see if crude can shake this off and push out to near the highs that we saw in July. But for now, I'm taking the view that we're going to see perhaps this strength run out of steam and the market turn down. Really interesting market to watch over the next few weeks. That's it for the update in oil. We'll see how that trade works out. We'll come back to it over the next couple of weeks and do an update. We do, of course, look at oil as well in the live stream, so attend that if you can. But for now, we'll leave things there. So for me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.